Welcome back. You're watching Indian Open. Let's just quickly take a look at what the Asian markets are doing, and then we go across to our guests who are joining in as well. So China, for one, also after opening up, after 7 sessions of a closed market, is down about 8%. I think the others have somewhat done that over the week, so there's not much of a reflection of that. Let's bring in our guest then. Avinash Gorakshakar, Director of Research at Profitmart Securities, is joining us on the show, along with him Ruchit Jain. On the technical front from Angel Broking, as well as Gaurav Bissa, AVP at LKP Securities. Good morning to all you gentlemen. Avinash, I want a quick comment from you before I go across and get in some trading ideas. But on the back of the budget, anything that looked positive or negative that you feel that you should rejig your portfolio accordingly to?
My guess is I think there will be very few positives in the budget, but I think a lot of money government is going to spend on water and irrigation as well as sanitation. So I think within that pocket possibly one could see a lot of buying emerging in this market, although today's markets may see a kind of a significant gap down considering the kind of meltdown we have seen in the Chinese markets. Our sense is that it's going to be a very volatile market, and I think companies like typically which are focused more on the rural side, typically even from the autos, a Mahindra and Mahindra or maybe a Finolex Industries, could possibly see a little bit of buying from the current odd levels. But nevertheless, I would believe that until the dust settles down, I think it would be wise enough to stay put, considering the fact that what happens on the coronavirus plus how China obviously performs throughout the day is going to be very crucial. So till that time, I think investors should be pretty cautious and stay on the sidelines.
Okay, another one would be Astral Poly, so we'll watch out for all of these stocks at open. Gaurav Bissa, quickly coming to you on your trade on the index. You may actually see a flattish move on the Nifty based on what the SGX is doing, but what would the trade look like?
Good morning. See, it's going to be very difficult to gauge where the market will open. It all depends where exactly we open and how we perform in first 15-20 minutes. We are expecting that we can see some stability in the very first minute and we can see some spike. But it looks a little bit difficult. If you talk about the supports, 11,720 was the initial support. We have closed well below that level. The next set of support, a strong support, would be around 11,550. So if we see a dip towards 11,550, 580 in the earlier of trading session, then with a stop loss of 50-70 points, one can buy for types of 11,720, which if sustained can lead to high levels. But at this juncture, it is difficult to say. I can say one can buy, but then what if it opens gap down or what if it opens gap up? It's going to be very volatile, at least in the first 15 minutes. So let the market stable, and we can see a lot of opportunities going ahead.
Okay, got that. The other one, Ruchit, on the Nifty Bank after the collapse on Saturday.
Yes, hi, very good morning. Well, certainly, before the budget, we have seen some 5 or 6 trading sessions where Bank Nifty had seen a consolidation, but unfortunately, we have seen a follow-up selling post the breach of 30,500. So I think on pullback move now, 30,400, 30,500 would be a stiff resistance for the Bank Nifty index, and on the lower side, 29,400, 29,500 would be the support. So we are expecting some good amount of volatility to be there. 29,500 to 30,500, this would be the 1,000-point range where we could see some volatility in near term. So I would wait for some pullback move towards 30,400, 30,500, where I think if the short-term trend continues to remain negative, then one can initiate fresh shorts over there.
Okay, 40 seconds left to go for market pre-open. We'll come back and discuss your individual stock ideas as well for the morning, Ruchit and Gaurav Bissa. But just the fact that you need to also keep in mind result reactions that were missed out on Saturday's session. So maybe look at a Relax or Footwear had a good increase in margins. EBITDA moved up by 40%. So that is something that you could keep in mind. Garden Reach Shipbuilders. Not a very great set of numbers. There was an EBITDA loss that could have a negative start. Inline, Soba Developers, today ahead of results, even Godrej Properties, remember, 8% lower. The entire real estate pocket, the Nifty Realty Index, was down over 6% on Saturday's session. So we'll see whether there is anything set for a bounce today or not. Markets at pre-open, Nifty 50 opening, the first pop opening negative, Sensex opening positive. But again, these are very volatile ticks early morning, keeping it with individual stocks then instead of the index. So the index, whipsaw move on the index this morning. What's not doing well is IOC, which is down about 3.5%. Indian Oil, Bharti Infratel is showing you an 8% cut. We'll wait for how this, this is not the final take. Tata Motors, remember the auto sales numbers have been a disappointment. We're going to watch out for Hero MotoCorp in particular because that was a big disappointment in the two-wheeler space. But not a major reaction to that one. 24.40 on the stock. Nestle is down. HDFC Limited is down 1.5% for that one. Titan, Kotak, Mahindra Bank. SBI is at 302. We've got Vedanta, ONGC, and Reliance Industries at 1360. What's gaining is JSW Steel, Z, Yes Bank, L&T has moved up a bit, 1300 on the stock. Interestingly, it didn't fall too much. Infosys too, after holding steady along with TCS on Saturday's session. So there's IT, which is looking buoyant in today's session, at least at pre-open. And Maruti Suzuki is up 0.5%, so 68.46 on Maruti in today's trade, and ICICI Bank too at 5.05 this morning. The currency market was closed on Saturday's session, so I didn't see a reaction then, and today is also pretty at the same level.
Yeah, the yields to the Avinash should be interesting. We'll get to them in a bit. Just want to mark 3 or 4 names which on news might be reacting. So Relaxo Footwear, the numbers looked okay at a point of time when the markets may be slightly more stable than what they were on Saturday. Let's see if there's a reaction. No, not quite at the current point of time. HDFC Life, SBI Life, ICICI Pru, 3 big cracks that happened on Saturday. Would want to see what those are up to as well. For now, the pre-open session is not indicating any upticks. SBI Life would particularly be interesting. Nope, for now, nothing too dramatic. But let's give these rates a chance to stabilize, and then we talk more about them. ICICI Pru is. So, like I said, horses for courses, and different stocks are moving very, very differently. And we'll keep an eye out for ITC for sure. I would also keep an eye out for Bharti and Vodafone, because I think the notes which came out suggested that maybe, just maybe, the government is penciling in only the AGR dues and no penalties from their telcos. And does the market read into it that way, and would that therefore be considered positive? So I think 2 or 3 things that all of us would be watching out for in the session. Avinash, Gorakshakar is with us as well. And Avinash, my question to you is this. I mean, these cracks that we've seen in the life insurers players, you would have analyzed it. Do you see this as opportunities to buy, or would you wait on the sidelines and wait for some clarity to emerge or some dust to settle?
I think, Neeraj, clearly, the kind of changes proposed in the new personal taxation, slabs, I think is definitely not to go positively with most of the, new taxpayers. I would believe that, the Jan to March quarter is going to be a very crucial quarter for most of these insurance companies, because the bulk of their business comes in this quarter. So definitely, I think in this quarter, we could see a lot of volatility. Nevertheless, I think, these are businesses which are long gestation businesses, and where I would believe that, people don't buy insurance policies purely from the tax angle. So clearly at lower levels there could be some value emerging, clearly for companies like HDFC Life and ICICI Pru. So I would not take that point that because you don't get taxation benefits, people may not buy insurance. But yes, in the near term, these companies were trading at peak valuation, so definitely some amount of selling could come in, but that doesn't mean that incremental growth for FY21 could not come in. So I would believe that at lower levels definitely some good buying could come in across all the 3 insurance companies.
Okay, I should also get in those trading ideas from our technical experts. Ruchit, I'll come to you first. What are the stocks that you're watching out for today?
So I think today's theme more or less would be to buy the outperformers and sell the underperformers. So based on that theme, I have a buy recommendation in Divi's Lab. In spite of the volatile markets, we have seen the stock has steadily been moving higher from by forming a high top, high bottom structure. We expect this outperformance to continue. So one can buy Divi's Lab with stop below 1947 for a target of 2050. And PSU Banks has been one of the space where, in spite of the momentum that we have recently seen in the bank nifty, PSU banking space, most of the names have seen underperformance. PNB is a sell recommendation based on that underperformance. We expect the stock to head lower towards 55 or 56. So one can go short with stop loss about 61.
Okay, Gaurav, Bissa, what about you?
The first recommendation would be buy on HUL. On the lines of what Ruchit just said, that you buy the outperformers, or you buy at least the names that are still very strong, and it has been holding the ground so far. I would recommend buying at levels of 2095, 20 points higher. In otherwise market, it could have been a good buy at the current levels, but now is not the time that one should be adventurous. One can wait a bit, buy about 2095, keep a stop loss of 2065, target of 2145. Second, we buy Wipro. We have seen IT space has been the more stable name or stable space space in the last couple of trading sessions. Wipro has not done too much. It is now forming two bullish harmonic patterns, AB equals CD, and also alternate shark pattern. So I would recommend buying at the current price, also on dips towards 232, play for 250, 255 kind of targets with the small stops of 228.
Okay. I just want a quick call, Gaurav Bissa, on ITC after that big fall on Saturday.
Well, ITC at the juncture of 215 to 20 would look lucrative in the sense that it is forming a bullish harmonic pattern. But then we generally take a note that if a very fat candle is formed at the trigger point, it generally shows some caution. But at the current juncture, I think if the levels of 215 are sustained, we can have a move towards the level of 235. One will have to review at 235 because that was the breakdown level. But it can go towards the level of 235 if it sustains above level of 215.
Okay. Got that. Avinash, this excise duty increment on tobacco, does that remain an overhang?
No, I think in the near term, Devina, this was definitely expected, and I think my sense is that price increases could definitely come in. I think markets would definitely not look at it as a very extreme negative, because obviously in the past also cigarette prices have increased post these excise duty hikes. Our sense is that definitely from a longer term perspective, the kind of cash the company holds, the kind of ROE the company generates, definitely this could be an attractive entry point for somebody looking at a 2 to 3 years kind of point. And obviously, the cigarette business is something which the market does not like. But overall, if you look at the return ratios, our sense is that this could be a good opportunity for someone who wants to pick on to value, but obviously has to give a longer time, to obviously get an upside. It may not happen in the near term, but over the longer term, I think we still remain quite positive on ITC.
Okay. Well, for now, 215. I think I was reading this note which said, Devina, that if indeed the assumption might be, if the assumption is that the dividend policy continues, then it actually becomes a good dividend yield play. But that is questionable as well, as I think as Avinash said. So maybe the overhang stays. But valuations are attractive for ITC. They surely
always
are.
Been.
They've always been. They continue to be even more rich now because of the price correction. Sorry, Avinash, you're laughing away.
No, I think ITC has always surprised investors being the cheapest within the. Yeah. But I think Neeraj, let's be very practical. Looking at the cash and the kind of ROE, I would not be surprised that they would definitely ensure to give more value to shareholders. I think at these levels, somebody who's looking at a long-term horizon should not actually hesitate. I mean, there could be uncertainties, but in the past also excise duties having gone up, the company has managed these calamities quite well. So probably let the market sentiment get better. You could possibly see a bounce here.
Yeah, the only question is, as we've seen now for the last few years, the market continues to prefer HUL over ITC, despite the fact that ITC may appear more valuable. I think this whole comparison of between the two now needs to be bunked away, because somehow the growth trajectories for both has just been markedly different, and that should
the revenue streams are also so different. Like you can't compare an ITC to an HUL when ITC is bulk of the revenues coming from cigarette sales.
Yeah, entirely.
And the entire FMCG segment itself, just about 50%.
No, in fact, one thing which was surprising, Neeraj, in this budget, luckily the liquor companies were not touched. So, those companies actually did pretty well. So, market was expecting that possibly that could be the next pack where some negative surprises could come in. So, I mean, you could see a lot of liquor companies doing pretty well in this kind of market.
Okay. The one pocket that has suffered a bit, and I think maybe you guys spoke about it, but just wondering in the two-wheeler space and the kind of auto sales numbers that Hero MotoCorp, for example, has shown, Eicher Motors has shown, the stocks are duly reacting as well at the end of 8 minutes. What would you do with these stocks now at the current point of time?
I think, Neeraj, my sense is we could see continued weakness in both the two-wheeler as well as the commercial vehicle players. And I think it's going to be a tough period at the Jan to March quarter, because on ground, reports suggest that, the demand is yet to recover in a big way. And I think the auto sector was looking at a very big kind of possibility that possibly the scrappage policy could come in this forthcoming budget. But I think unfortunately, the market has not actually not got this, and I would not be surprised that possibly the Jan to March quarter could be as bad as maybe the third quarter. So I think you could see a little bit more pain, in most of these high price stocks, especially an Hero MotoCorp or maybe an Eicher Motors, which typically still trade at fair, kind of expensive valuations.
I just want to mark the bond yields, though. They would now be reflecting what the market view is, or the bond market view is. Well, not dramatic, though, I must admit. On the budget day, we were all wondering whether or not there will be a sharp reaction. There has been a reaction, but nothing too dramatic. So you got to take that into account. Just about 10 basis points right now for the bond yields as well. So doing okay. They've been at the end of the first 8 minutes. The other one, which continues to languish, is Reliance Industries and 1369. That stock has come off and come off quite precariously. Now, Gaurav, Bissa, I don't know, I mean, I don't follow technicals or derivatives as much as you do, but under all circumstances, has Reliance breached some near-term supports? Because it continues to fall at every support level, wherein people might have cited that there is a support here. It goes below at 1369. It's off substantially from those highs of 1600.
If you see the if you see daily chart or weekly chart, it has found a bearish harmonic pattern. We call it the crab pattern. It has corrected exactly a point from those levels. And now, if you look at the weekly charts, it has a supported area of 1350, 1360, which is again a strong support based on Ichimoku. The Kijun is placed over those levels. So if it sustains above level of 1350, I am expecting a bounce from those levels. We already seen a correction sort of coming in. People might talk about double top formation happening at the high levels, but at the current junction, I think the trade is more traded for the upside. Whether it will hold, that's a different question. But I think at the juncture, 1350, if that is sustained, use that as a stop loss and one can play for at least 1400, 1420.
Bajaj Finance is the other one. Just want to look at that one and what that's doing post Saturday's cuts. Come off from its highs, I think 4,400 plus to 4,250. Is this a good entry point, Ruchit?
The thing is, the broader trend for the stock has been positive, but I would say that no one should keep a buy on dips approach over here. The major support for the stock is now coming around 4100, which is the 89 EMA and the recent swing low. So I think if we get some more dip towards 4900, the risk reward ratio would become much favorable to take fresh longs over there.
Okay, in a staggered way. What would you do with some of the other NBFCs? And do you think that the budget did enough? I mean, they extended the partial guarantee scheme, but the fact that, the credit availability, which remained the challenge, wasn't tackled in a way that it could have.
No, I think, Devina, I think we could continue to see a little bit of stress and pain, for the smaller NBFCs. And I think my sense is that, the private sector banks, the small finance bank could do much better than pure NBFCs. And I think definitely in this kind of market, I think NBFCs have a higher degree of risk. So I think, if you leave alone companies like, say, Bajaj Finance, which is fairly well funded, they are probably, the AUM growth, the loan book growth has been very strong despite very challenging macro headwinds. So I would not put my finger and bet on pure NBFCs. I think something like an Ujjivan Small Finance Bank or an ICICI Bank, I think these are definitely reasonably good bets in this kind of market where possibly the fourth quarter and FY21 could be a lot better.
Comes out with numbers today. Do watch out for Ujjivan as well. Avinash, so let me ask you, plain Jain, from all the things that happen in the budget, what was the most notable investment opportunity available or investment opportunity missed? What is it that you would either buy for sure or sell for sure if you had in your portfolio?
No, I think within the selling side, Neeraj, I would definitely look at something like the auto companies. I think auto companies are definitely going to face a massive brunt. And I think in terms of the miss, I think nothing actually came in for the automotive sector. Definitely, even at these levels, maybe a Tata Motors or typically even a Hero MotoCorp could possibly see further selling pressure. And on the buying side, I think, one pocket which has seen a lot of activity is obviously the water and sanitation space. I think, companies like Astral Poly, Finolex Industries, I think one could definitely see a lot of buying in this kind of market because obviously with the sentiment going for a toss, these kind of companies would obviously see strong earnings growth coming in for FY21 and obviously, a lot of incremental business would come in from the kind of new schemes the government has announced.
Okay. We're about a minute left to go for market opening. Pre-open, we've got a dip of about 1/3%, so no major damage after the big dropping that we got on Saturday's session. 11,627 makes the index levels all that more attractive, but it's off the record highs by quite a bit. Quick top calls from both our technical experts. Ruchit, I'll come to you first.
I would continue to recommend going long on DV's LEP with stop below 1947 for target of 2050 considering its recent outperformance.
Okay, Gaurav Bissa, what about you?
I'll go with Wipro for the reason that it is from the stable space and with a couple of harmonic patterns has formed, it is becoming lucrative. One can buy the current price, play for any dips towards 222, stop loss of 228, target of 250 to 255.
All right, gentlemen, all of you, thank you so much for taking the time out and being with us early morning and giving us your synopsis of trade. We are likely to start off just marginally lower if the pre-open rates are to be believed. Let's see if we build on further from there during the course of the day, or do we stabilize? The Bank Nifty actually starts off in the green. Keep that at the back of your mind. But about 1/3% in the red for the Sensex. Nifty 50 about 30 odd points. So non-banking names may be impacting a bit, but it's a flat start, to be honest. Let's get the mid-cap and small-cap indices also on the screen. It's a flat start again for the small caps and the mid caps. So it's a bit of a relief, I'm sure, for a lot of people who would have thought that there's an encore. There might well be, but for now the start isn't indicating that. More green than red on the screen, keep in mind. What is doing well? IOC, BPCL up about a couple of percentage points apiece. Coal India, the numbers are looking okay and the stock is up. Z is up a bit. Infosys gains marginally in trade. Asian Paints, Bajaj Finserv, Mahindra and Mahindra are amongst the others that are doing okay. And there is also State Bank of India, which is in the green, by the way. Top 10 gainers includes a State Bank of India. That's arguably the only banking stock out there. What's not doing well? ITC yet again, down about 1.5% or nearly 2%. Power Grid down about 1.5%. Reliance Industries continues to languish, and HDFC Bank is down about 0.5% in the red as well. So some of those stocks are definitely correcting. ITC, the big pain point. Power Grid also losing out in HDFC, but I think you would focus a bit on the gainers as well, simply because the start is not as bad as what we were wondering. Watch out for the oil marketing companies and some of the PSUs. I must tell you, brokerage note after brokerage note has stated that CPSCs are available at attractive valuations. The numbers are looking okay. Maybe, just maybe, today could be a day for the PSU stocks in the session. Devina, what are you spotting?
Well, we'll start off first with, few of those names that came out with results. Relaxo Footwear for one, decent set of numbers. And the stock in pre-open didn't do a whole lot much. I think now also is down about 2.5%. Garden Reach Shipbuilders, on the other hand, also had a disappointing quarter. EBITDA, profit, revenues, all were down, and the stock has got a big cut of about 12%. What else is doing okay for itself? Castrol India for one is up about 3.5%. HDIL, very small name there, but is doing okay, about 3.5% higher. Max Financial is up about 3.25%. Trent, that's up 2.5%. Equitas Holding is up about 2.25%. I want to look at all of the insurance names, life insurance plays. So SBI Life, HDFC Life, ICICI Pru, they're still down, but the cuts are more limited. SBI Life, in fact, has recovered today, so it's open positive by about 2%. ICICI Pru, as the pre-open indicated, was any which ways in the green. That's up about 1.25%. So that's something we need to watch out for. ITC is the other one. I just want to take a look at that one and what that stock's doing this morning. It's down about 3.5%, adding on to losses of about 6% from Saturday's trade. UPL, you've got Shilpa Medicare, India Cements, Avenue Supermart. Everything else is up. Havells is up about 1.3%. Dish TV, Avanti Feeds at 669. Berger Paints is up again. So the broader market space looks okay, but the breadth is still tilted more towards the negative side. But you do have a few stocks holding steady ground. 472 stocks have advanced versus about 690 stocks which are trading in the red. Let's welcome in Nilesh Shah, MD and CEO at Kotak Mahindra AMC. He's joining us on the show this morning. Nilesh, very good morning to you. It's been a hectic weekend for everybody. Your first take on the budget, was it enough or the sentiment is negative, but nothing that negative came about in the budget, though the expectations were riding really high?
I think from a market point of view, LTCG exemption not being restored and DDT getting shifted from company to recipient probably created a disappointment. From an economic point of view, growth is a function of government expenditure, consumption, investment, and trade balance. On the government expenditure side, 0.5%, which is maximum available limit under FRBM, that's been utilized. So government expenditure is at its peak. On the trade balance side, clearly they have put certain items on higher import duty list. Hopefully that will give protection to domestic industry, and we will be able to swing trade balances little bit in our favor from current level. The third thing is related to investments. Now here we need to execute what is the intent in the budget. Three important things which came in budget. One, there will be no criminal liability for civil act. not only across Companies Act but also across other acts. If this can materialize in real life, that will be fantastic. Second, strengthening enforcement of contract. In any business, one has to honor words, commitment, and the contracts or the agreements. In India, in the overburdened judicial system, many a time contracts are difficult to enforce. Now, if we can strengthen that like IBC, I think that will be again fantastic. Now, all these things will encourage business over a period of time if intent is converted into action. The third and the most important thing in the budget is charter for taxpayers. Now, clearly, many businesses have talked about tax harassment, tax terrorism, and whatnot. Now, if there is a fair way of collecting taxes, then I think businesses will flourish. Obviously, to revive investment, many things are needed apart from all these things I mentioned, and that has to be done outside of budget. I hope and pray that government, RBI, and other regulators will ensure that anything which is required to help entrepreneurs grow business, revive investments, will be done. On the consumption side, budget has done certain things. Now, obviously, within the revenue constraints and after taking ambitious target of 2,10,000 crore on divestment, more than 1,30,000 crore on telecom revenue, whatever they could do for supporting consumption, they have done. But clearly, outside of budget, also there are ways and means of supporting consumption. So my feeling is that overall budget within the constraints have done. People's expectations were higher, but they should continue doing or fulfilling those expectations outside of the budget.
Do you feel all this changed the market dynamics a bit, or do you feel the trajectory that we had charted out for ourselves pre-budget continues now?
I think the market trajectory will be influenced not only by budget but also by global factors. On Friday, we had seen Dow Jones correcting. Today, we have seen China taking aggressive step to stop the decline, including not allowing short selling, including putting brakes on what can be sold, including pumping $172 billion in their banking system. Despite taking all those corrective action, when I last saw in the morning, Chinese markets were down about 7.5% to 9%. Now, this coronavirus scare is real. It's impacting Chinese economy. It's shutting down businesses there. There are innumerable linkages for that businesses by supply chain into various parts of the world. Clearly, global growth will be at a risk, and as global growth slows down, our markets cannot remain immune from it. So our markets, pre-budget and post-budget, I think post-budget it's factoring in far more scare from the coronavirus.
Nilesh, good morning, Neeraj here. So what would your belief be? I mean, because one works with hypothesis, and let's work with the hypothesis that the coronavirus scare will, yes, slow down GDP and so on and so forth for some time, but not be a permanent scare. The resultant impact on crude, the resultant impact on how India is largely been a domestic oriented story, etc., etc., etc. Does all of that weigh in, or for now, those theories are on the sidelines?
Neeraj, people will be driven not only by fundamentals but also by sentiments. Now imagine a foreign investor who is sitting thousands of miles away. If he's taking money out of China, there is one possibility that he would like to redeploy that money somewhere in emerging market, and then India becomes the preferred choice. In this budget, we have rolled out a red carpet for sovereign funds, whereby any of their investments in priority sector investments or infrastructures will be completely tax-free from interest, dividend, and capital gain point of view. So if there is reallocation from foreigners from China to India, that's a fantastic thing. If MSCI and other indices company takes into account restriction imposed by China every now and then, they did it in 2013, they are doing it in 2019, and decide to cut weightages of China in MSCI index rather than increasing it as they had announced earlier, there will be redeployment of flows to India. And imagine MSCI threatening to reduce India's weightage when NSE stopped sharing feeds with Singapore Exchange. Here, China is actually restricting you from selling your stocks and taking away your money. But let's see what MSCI does. Now, on the other hand, if there's no redeployment of money and there is general risk aversion, and the foreigner says that let me take some money out of emerging market, then India also suffers despite no fault of theirs along with China. So the situation will be very fluid. It will be very difficult to take a call today how it's going to shape up in the days to come. As situation evolves, reactions will come.
Yeah, well, okay, maybe that's a better way to approach this. Just wondering, Nilesh, just taking this conversation back to budget for a bit. Since you mentioned that point about how sovereign wealth funds and the investment red carpet being doled out, do you reckon the theme of this budget in large portion also has been that let's not try and go out after what's been done in the past or done beyond the budget, which is give dollops to consumers, but give them just a wee little bit via these tax changes if it materially means anything, to be honest, and the whole market is still confused about whether it does or does not, but give very little to the consumer, but try and make the landscape easy for foreign money to come in and invest into large-scale infra projects, because frankly, India doesn't have the money or the rates to be able to do that. So make that easy, and the fructification of that might happen after 6 to 9 months. Has that been the central theme of sorts?
No, I don't think so. Government has the luxury of favoring one versus another. As I mentioned earlier, you have to pull all the 4 levers of government expenditure, consumption, investment, and trade balance to pull your economy forward. Similarly, for investment, you require domestic savings as well as global savings. If you rely only on global savings, it has its own consequences. If you rely only upon domestic savings, you may not be able to achieve the desired growth rate which you have. So the government does not have a choice. They have to be fair to everyone, domestic investors, global investors, domestic entrepreneurs, global entrepreneurs. They have to push all the levers on government expenditure, import and export trade balance, consumption, investment. They have to pull all the levers in order to ensure there is fair growth.
Nilesh, does investment into specific pockets, do you feel that the mindset changes now? Consensus view was the corporate-facing private sector banks up until now, which were the theme of investment. Prior to the budget, the emphasis was on whether or not infra will start seeing more money pouring in, whether if something's done for real estate, then real estate stocks will do well. Anything of that sort in terms of a theme that changes what the year looks like?
I think by the time we arrive at the conclusion, what changes have happened courtesy budget into the valuation of a company, market would have already adjusted. We saw that in a tobacco company where prices got adjusted far before anyone could take a view based on the budget to invest. So budget for us is it's a how do I describe it? Budget we really can't factor into our calculation. We have to invest on a longer term basis. Not only this, but there will be many more budgets which we'll have to face in our investment journey. Budget does not necessarily change your investment outlook unless until there is a very, very different proposal. Even in that tobacco company, pre-budget, one could always expect some sort of price hike happening. So one does analyze budget, but it does not really change your investment outlook. Your focus is far more on a bottom-up basis with companies, their management, and how do they tackle the changing situation.
Nilesh, just one quick clarification that I would need from you as also the head of Kotak MF, as also from a position in AMFI. On the TDS on income above rupees 5,000 from units of mutual funds at the rate of 10%. Can you give us some clarity about this, and would an AMC be deducting the tax at source and then passing on the numbers, and of course anything else that you believe impacted AMCs, because this whole talk of how this personal tax changes might impact ELSS schemes as well?
So undoubtedly, we believe if people opt for new tax regime, whereby they give up their exemptions for a lower rate, then their incentive to invest in ELSs goes away. But at the same time, appeal of mutual fund for a customer from their retirement point of view, from their other investment purposes continue to remain robust and valid. Our feeling is that there will be marginal impact on ELSS flows because we never only provided tax benefits, we also provided reasonable return on a customer's investment. We provided reasonable solution for their financial need. Coming to the dividend on mutual fund, the current reading of the scheme of the regulations suggests that this is applicable only to the dividend, and any dividend declared by any of the mutual fund scheme, be it debt, equity or hybrid, will have to withhold 10% tax, and the payment to the investors will be on a net basis. As of today, our understanding is that this is not applicable to capital gains. This withholding is only applicable to the dividend.
All right. We leave it at that, Nilesh. Thank you so very much for joining us. Really appreciate you taking out the time this morning.
Thank you.
All right, the markets are extremely flat right now, 11,654 on the Nifty. Sensex down 41 points. Nifty Bank also absolutely flat. So no major carry forward reaction from Saturday's trade.
Yeah, let's slip into a break then. And did Budget 2020 do enough to address the growth emergency? Pranjal Bhandari, Chief India Economist at HSBC, joins in. Is the next up. Is the modest increase in social schemes enough to support the economy? Ashima Goel, member of the Prime Minister's Economic Advisory Council, would be joining in with her thoughts.